Let's take a look at the crude prices first and what a rebound that one has seen. The Brent is back at $111 a barrel as supply concerns creep back. Investors believe that the historic deal between Iran and world powers will not result in an immediate increase in shipments from the OPEC member. On your screens, 110.90, so 111 just about holding into the markets there. The gold in the meanwhile is trading at a one-week high, buoyed by short covering gains in the previous session, but the lackluster physical demand and uncertainty over the US stimulus outlook is weighing on to the sentiment. The silver prices also have seen a decline coming back into the markets, though holding just above that $20 per ounce mark. Let's get in then. Kishore Narne, he's Associate Director, Head Commodities and Currencies, Motilal Oswal. He joins us. Also joining us is Victor Fu. He is CEO, Singapore Precious Metal Exchange, and to give his views on the precious metals basically. Victor, hi. Let's start with you first. And the gold prices are headed for first annual decline in 12 years. Do you see an extended period of decline for the gold prices?
Well, personally, as most people know, that we are basically have been hitting all-time lows. I personally feel that there will be certain support, probably in regions of 1,000 to 1,150. But we also see that there will be an uprising curve where prices will start to move further up.
Kishore, what's your sense now coming in for the gold prices? Because while we are nearing the year end, we are into the bearish zone even now. Would you say that we might be looking at further declines? Do you see 1,200 reaching yet again the kind of April levels that we saw?
Yes, certainly. I think 1,200 is not a big deal. Probably I'm looking at, the question is whether we'll be breaking the $1,000 level or not. So I think at this point of time it is too early to predict, but I think 1,080 is very much visible at this point of time on dollar terms, especially in gold. And once the actual tapering starts and how the monetary policy reacts and how the economy reacts to that, if the economy sustains a tapering in the first 2-3 months, then probably you might even see gold declining below $1,000 also.
Victor, many reports favor that the silver investment over gold on expectation of high returns is the way to go forward. What's your own sense into that? Are you outperforming or are you giving an outperformance on silver?
As you know, the ratio of gold and silver is currently 1 to 60. And the rightful ratio should be 1/15. So as you know, silvers are a bit more volatile versus gold. So I guess for the average investor, having a balanced portfolio versus your risk appetite will be the most effective to do that.
Fair point, Victor. Also, do you see, how would you look at the gold and silver prices over 3 to 5 years from now? Because these commodities are not bought for the short term. On a longer term period, would you advise holding?
Well, personally, as a physical exchange, SGPMX is always long on metals. So personally, I would see prices going up probably by another 30 to 40% from the current levels.
Kishore, what's your sense? For a longer term, though, how would you look at gold and silver prices? Because in the near term, as you pointed out, you still are bearish onto the commodity. But going forward, do you think it's a good idea to start buying, especially when it touches your levels of 1,100 and below?
What is the longer term? Can I have a term frame?
3 to 5 years perhaps, Kishore?
3 to 5 years probably. I think towards the end of 2014, anything below $890, $900 levels, I would see some kind of a buying coming up. That could be better for investors. But otherwise, if you are an investor and you are looking for returns, then certainly gold will disappoint you in the next 2 years.
Kishore, there have been various reports as we end into 2013, 2014 forecasts have started coming in, and while Goldman Sachs of course has said 1,050, there are other people who are talking about 1,425, 1,500. There's a report out on 1,600 as well from somebody. Are you looking at a broad range of gold prices in the next year?
No, I think I'm looking at next year, probably 2014 and 15 should be around 890 to around 1200, 1250. So again, I'm saying your entry point becomes extremely crucial. It'll be extremely difficult to pinpoint the bottom and enter at those levels. So if you are entering it around anywhere in between 1100, 1200 levels, so probably the returns will not be so good that probably other asset classes will outperform gold. So in a recovery mode, that's what I was telling, that if the global economy survives tapering, then gold is one asset which everyone would be shedding and then probably going into riskier assets like equities or any other emerging market equities or probably emerging market currencies also.
That clearly has been the scene in this year. But Victor, what is your view on the volumes on the derivative products? I mean, you had an exchange there. Have you seen the volumes go down as well?
With the volatility that we see, definitely volumes are going to be increasing. Most people are going to be taking advantage to arbitrage on the volatility. So I would say that volumes will definitely increase in the short term.
Well, that's about the gold prices. But Kishore, how would you look at the energy space? Because yesterday was a day when everybody was selling into that market. The risk premium had gone off. There was a historic deal happening between Iran and the world powers. But after people are reading the fine print, the buying is back.
I think looking at crude market, probably we're 92 on WTI is somewhere very good support levels. Again, 94, 95 are extremely good resistance levels. So I would really try and avoid a positional trade until unless this breaks either side of this range. Within the range, probably if the crude hits back towards around 94.5 kind of levels, that is around in India 5900 to 5950 kind of levels. There I could try one more time going short on crude because I don't see any other supply side issues which can contain the supply at this point of time, and demand has not been extraordinary, but obviously supply with US production kicking up, Iraq joining with more supply, Saudi has more and more possible supply. So I think you have very comfortable supply situation. So anywhere close to 95 I would like to go short on crude.
What's your sense also now coming in for the base metal prices? Because there has been this talk about China reforms. We've seen a mixed data coming in from US. The tapering perhaps will not happen too soon as the markets were expecting. Do you see them as positive cues for going forward?
I think a lot of these positive cues are already has been discounted in the market, and the market has not been significantly on an upswing. So at this point of time, I would feel there can be little bit extension in crude, copper or even nickel, but anywhere close to 447, 448, I would like to go short on copper with stop loss of around 452 and look for targets close to 440. Again, I'm not significantly bearish as well. So on the lower side, 435 comes as a good support. On the higher side, 452 comes as a resistance for copper. Until unless we break this range, there's no positional view at this point of time.
Kishore, while you are quite clear that the precious metal space is going to be further bearish, might see extended bearishness going forward as well. In this year, we also have seen the base metals give you negative returns. It's only the energy space which somehow is in the positive territory. But going forward, how would you want to treat these three spaces?
I think if you're looking at a 1 year or more perspective, probably base metal space are going to be performing better than both of the other asset classes. And especially if you're looking at next 6 months or so, I think nickel is one commodity I would be betting more on upside, which could be potentially extend towards 950, 980, even 1,000 rupees levels on domestic markets. And international markets, especially LME, could be 18,000 plus kind of levels, which we'll be looking at. So any short-term dips towards 820 or 830 kind of levels should be still bought into, and probably on intraday or maybe a day or two perspective, 845 kind of levels should be sold into, and targets are not significant. Again, 835, 836 should be targets for the short trades, especially for today or tomorrow.
Just one word on natural gas as well, Kishore, before we let you go, and that really has been a better performer in the energy space. Do you expect it the same going forward?
I think natural gas should be topping out somewhere. I think I was looking at 250, 255 kind of levels, but I think the rally has been appears to be tired right now. So anything close to 245, 246, I would enter a short trade. Probably 250 will be a stop loss on the higher side, and 236, even 232 could be potential targets for this weekend.
All right, so that's the view coming in from Motilal Oswal. Then Kishore, thank you so much for joining us and giving us out your strategies. Mostly sell calls coming in from Kishore there, while the energy space, of course, has done quite well today. 1% of gains coming in for the natural gas prices, and it's more than 0.5% up coming in for the crude as well. Let's do a check on the agro space now and start with the oil seeds, which have seen some profit taking today on stronger rupee. The losses in the overseas market and concerns that the exports of soy meal to Iran may drop, as after sanctions being lifted, Iran may turn to Argentina Argentina or Brazil for requirements as well is something that's putting pressure on the prices. So on your screens, 0.5% of a decline coming in. The Indian sugar prices in the meanwhile have extended losses as well on sluggish demand and high carry forward stocks. The international sugar prices are trading at an 8-week lows, while the Indian losses are contained because of the delay in crushing by the UP mills and also expectations of increase in import duty. On your screens, nearly 1% of a decline for sugar. As of now, the mills are having a meeting with the UP government on linkaging in the sugar cane and the sugar prices, and that's the meeting result that we are awaiting at this point in time. In other commodities, you saw the guar futures slip on large supplies from new season harvest, subdued demand and expectation of higher output as well. Take a look at the Indian cotton prices then, and this week has been on the weaker side on subdued demand from local mills and exporters on large supplies from new season crop and estimates of a record crop as well. The Cotton Advisory Board estimates output at a record 37.5 million bales. The international prices in the meanwhile have seen a bit of a support coming back. But what does all that mean for the Indian prices? For that, let's get in Dhiren Sheth. He's President, Cotton Association of India, and he joins us on a Mumbai phone line. Mr. Sheth, hi, welcome to the show. First of all, what's your own sense coming in for the Indian crop estimates, and how much of a further decline and a daily outlook are you watching out for?
Well, our association is estimating the crop to be about 3 crore 80 lakh bales.
And what's your sense on the daily supplies that are coming into the market?
We are seeing around 150 to 170,000 bales coming in to the market since the last 10 to 12 days. I presume that this will go up to 2 lakh bales from the first week of December and eventually move up to 2.5 lakh bales by the end of December.
Mr. Sheth, since there is not much of export demand into the spot market, do you think this would continue to push prices lower?
I think so, yeah. Like we discussed last time, last month we had estimated prices to come down by 10%, which has happened. We estimate that the prices will come down by another 7 to 8% in the next 15-20 days.
Mr. Sheth, are you looking at any policy changes? Because this is an industry that has been awaiting that for the longest time, and we haven't seen any policy change happen for most of the agro commodities. So in that sense, do you think it's taking a back foot?
I don't think there's going to be any policy change, and I hope the government doesn't keep on changing policy, so that no policy change is actually for the better.
As you said, you are expecting a 7% decline in the prices. How soon do you see that happening, and do you think after that we might see some consolidation?
Yeah, this should happen in the next 15-20 days, and that will then move on to being very close to support prices. So if the government starts buying aggressively, prices should stabilize at the level.
Mr. Sheth, also what's your sense coming in for the international markets? Because the demand from China seems to be going slightly on the lower side, and we have seen the prices in the international markets gain up. Do you see any of that impact trickling in the Indian markets?
I think so. That's exactly why prices are coming down in India also. China has been very slow this year, and the international market is also not looking very strong.
All right, Mr. Sheth, we'll let you go at that. Thank you so much for taking time and talking to us. So that's the view really coming in for the cotton industry. The prices have declined 10% in last 1 month, can go down by 7% in another 15-20 days, is the view coming in from the Cotton Association of India. So quite bearish views going forward into that space.